Corn just crashed, and I want to talk about what happened and why calls and puts are basically valueless at this point if you want to trade corn options. So, what happened is the USDA WASD report estimated bigger harvest than anticipated. Actually, it was anticipated a smaller harvest, and as a obviously the result was an expectation of a bigger harvest for corn, and there was no change for the demand, and there's somewhat of an oversupply narrative kind of going on for now. Basically, we have way more supply than expected and no change in the demand, so price obviously will have to drop. Now, price dropped quite a bit on corn. Something that doesn't happen often, is at least at this magnitude, and we'll take a look at the chart in just a second. And my previous profit plan, if you saw the video, was to sell a strangle after the USDA report, given no major news, which obviously wasn't the case. We had some major news, and price just completely went down to the trenches. So why calls and puts are valueless now is because volatility went down, premiums are extremely low, and fees are basically just going to eat up the profits unless you sell options really close to the money, or maybe you go to cycles with 150 or anything 120 over 120 days to expiration. Anything else, as I will show you in a second, is basically valueless, and no point for you to really sell premium for and get paid basically nothing. So this is what happened with corn. You can see this massive drop. The report came out at 12 in the afternoon, and price just dropped 5.44%, and it dropped even a bit more today, almost 0.5% more. And this is the short strangle that I was looking at. Given price would have not dropped that much, so it went up right to the expected move, which was my short strangle within that same day. So this would not have worked, obviously, but I know better. I've waited for the report. I've been through this before, especially at the beginning of each year. This report is pretty big, and it ends up moving the price quite a bit, but not as much. And volatility dropped as well, so you can see volatility basically just kind of dropped off a cliff, very similar to what happened to the price itself. And premiums are extremely low. If you take a look at, for example, let's go to corn, and let's just, for example, look at I think the 38 days to expiration cycle, and then the 73. So 38 days to expiration. The market is closed right now, but let's just take a look. So this is the March expiration, which is the same one we're looking at right now. So let's see just what can you get maybe for a 460, whatever. Let's go to $460 call if you decide to be directional. So you basically will be getting $38. Fees are gonna be around $3 to open and to close, or sorry, for a round trip, if I believe. So obviously this is not something you can work with, even though you probably get a bit more credit because of the spread. It's still not really worth it for you to trade. Even if you do a short strangle, it doesn't make sense. Even if you go to the next cycle, 73 days to expiration, we look at the similar strike price, and you can see that we get a bit $125, which is still not enough, especially because you're paying about $3 to $6 in fees. So you're gonna be taking profits at half of this. You have the bid and ask spread, so you're looking at basically not getting any premium unless you open a short strangle. But in this case, obviously, short strangle would make sense. Would not make sense, actually. Sorry. Short strangle would give you a bit more credit. For some reason, it doesn't load up. Let me just try it again. Yeah, it doesn't want to load up for the short strangle. But even then, it's not going to be that much more credit. Maybe $200 in credit, which sounds much better at least. But we're talking about 73 days to expiration as opposed to ideally closest to 45. And we cannot get any credit because of the low volatility. And if volatility would have stayed even just a little bit higher, uh, and price would have also maybe stayed somewhere near its the sideways range has been moving within, then it would have been a really good entry. But obviously things have changed, and there's basically no premium to be collected on corn, at least for the time being, unless price shoots up back up again, which is very unlikely, given the fundamentals. It might recover a little bit, but there's no reason for the price to kind of stay side moving anymore. We'll probably recover and then kind of keep moving slowly down. Same that has happened with wheat for quite a long time because of the oversupply narrative and I guess the oversupply fundamentals. So thank you again. If you have any questions, let me know. Keep you posted of my thoughts, my plans, my trades. As soon as as soon as I have anything, and every day, obviously. Thank you again, and I'll catch you in the next one.